Hello everyone, welcome to Practical Accounting Training Academy, the online accounting school where accountants in Nigeria and Africa in general, and including undergraduates, fresh graduates, business owners, and those who intend to change their career to accounting, they come here to learn the real workplace accounting skills. This is where they come. So today, I'm going to be teaching particularly accountants who are gainfully employed or business owners who do not have that financial capacity to employ accountant, how to compute PAYE tax based on the Nigerian Tax Act 2025, so that by January 2026 you do not need to employ accountants, you do not need to employ a tax consultant. You can do this yourself. That is why we call it DIY, do it yourself method of PAYE tax computation. So I'm going to be taking you through 5 steps, 5 simple steps that you do not even need to know accounting. You don't need to know taxation or tax laws before you can apply this. So I'm going to go straight to the point. Meanwhile, if you find at the end of this video, if you find it very useful, please save it for future purpose, so that by January 2026, when you need it, you just go to where you save it and you watch it and make use of it, or you share with your friends, your colleagues, your family who are business owners, who are accountants, who are tax practitioners that need this. You share with them. And if you also need this template or a more better template, you just drop it in the comment section and say template. Okay, I will share the template with you. So let's get right into it. Now, step number 1. Let's assume that you just employ someone and you agree to be paying the person just 70,000 naira monthly, right? So that is step 1. You determine what you are going to be paying on a monthly basis to that employee. Step number 2, you now turn this monthly pay to annual pay. So what are you going to be paying this person annually based on the monthly pay? Very simple. You just say that this annual pay multiplied by 12. Simple. It will give us 840,000 naira. This is how much this person will be taking up annually. Now, the step number 3. We are to determine the total allowable deductions. Total allowable deduction. So what this means is that the government believes that this 840,000 naira should not be taxed in the hands of the employee. The government believes that these employees should rather be given some kind of reliefs. Okay, so these are the 6 major reliefs that the law allows: the NHF, NHIS, pension, interest on loan, life instead of loan for owner occupied house, life insurance premium, and annual rent. Now, to simplify this, because this person is just earning 70,000 naira per month, so let's assume these are not applicable because they are not important, because of small businesses. Okay, so it's not compulsory. So let's assume this is not applicable now, right? So let's move on to the next step. So for step number 4, we need to determine the taxable income. Taxable income. That taxable income is the income that will be taxed in the hand of the employee after taking out the allowable deductions, right? So after we must have allowed that person those deductions, then this is what will be taxed. So how do we arrive at it? We now say B minus C. What is our B? Annual gross pay. Annual gross pay minus our C, total deductions, right? Because there are no total deductions, so we are still going to arrive at the same figure, which is 840,000 naira. That is the taxable income of this particular employee. Now, here is the most interesting part. I see it as the simplest part, right? So here is the tax table that you are going to be applied, right, with the tax rates. Okay, so what the tax law says that there are we have a graduating tax table or tax rate, whereby the more you earn, the more the tax you pay. So it says that the first 800,000 should be at 0%, should be at 0%, right? 0%, and the next 2.2 million at 15%, the next 9 million at 18%, the next 30 million at 21%, the next 25 million at 23%, and anything above 50 million should be taxed at 25%. Okay, so how do we apply this tax table and tax rate? Very, very simple. So what we are going to be doing is that we are going to be having these columns, this accumulation, taxable income, and tax due. Okay, but here is where we do the major work. Here, right? Here is where we do the major work. Okay, so how do we do it? You just say this. We bring in the taxable income, which is 840,000. We bring it in here. Yeah. This is the taxable income. This is what should be taxed. Right. So the law says that tax the first 800,000 in this 840,000. So under the taxable income, we just put 800,000. Okay. So the law says we should be taxed at 0%. So we say equals to 0%. It's still 0, right? I just want to put the formula multiplied by this. We give us 0. Okay. So the law now says the next 2.2 million should be taxed at what? 15%. Now, but if you look at this, after taking out 800,000, what are we going to have left? Now we can calculate it. We say this equals to this 840,000 naira minus the 800,000 naira that we have already taxed. This is the remaining balance to be taxed is what? Is 40,000 naira. So under the taxable income, we just say what we are going to be taxing is the 40,000 naira, and this is the tax that this person will pay annually, right? This is the tax this person will pay annually. So as a bonus, because this is annual tax due, okay, but you are going to be paying the employee monthly. So let's determine the monthly tax due by this employee. Just say this divided by 12 will give us the monthly tax payable. It's just 500 naira, right? 500 naira. Now let's assume that this person now earns about 30 million naira annually, right? This person earns about 30 million naira annually. Let's determine how much this person is due to pay. Okay, so we have taken 800,000. We have taxed 800,000 out of it at 0%. So what do we have left? We have 29.2 million, right? Okay, so the law says out of this 29.2 million, just tax 2.2 million, right? At what? 15%. So on the 2.2 million, this person will pay 330,000 naira. So what do we have left? To know what we have left, we just say what we have left will be 30 million minus 800,000 minus 2.2 million. So we have 27 million left. In this 27 million, you can see that we can still tax the next 9 million, right? So let's tax 9 million out of it. We have taxed 9 million and at what? 18%. That is 1,620,000 naira, right? Now, let's determine how much we have left. 30 million minus 800 minus 2.2 minus 9 million. What do we have left? We have 18 million. And the next one is what? 30 million. That means we can still tax 13 million out of it, right? So let's tax 13 million. 13 million. So we have taxed the 13 million at what? At 21%. Look at it. We just taxed the 13 million at 21%. That's 21% multiplied by 13 million. We give us this 2,730,000 naira. Of course, if you sum up all what we have taxed so far, you can say that we have only taxed 25 million, and this person taxable income is 30 million. That means we still have 5 million left, right? Okay, so let's see how much we have left. 30 million minus this minus this minus this minus this. I'm doing this because of, I know most of you might not be familiar with Excel, but the way I've explained, you'll be able to press your calculator to achieve what I have done so far. Now, what you will see is that we only have how much left? We only have what do you call it? 5 million naira left, and we are supposed to tax the next 25 million. That is, we can only tax the remaining what? 5 million naira. So we just tax the remaining 5 million naira. Okay, so that means on an annual basis, this employee will be paying 5,830,000 naira annually, and monthly he will be paying 485,833 naira per month. That is how simple it is to compute tax payable by an employee based on the new Nigerian Tax Act of 2025. So thank you for your staying with me to the end. So if you have any question, you can drop it in the comment section. I will be right there to answer your question. Thank you. Goodbye. I will see you in my next video.